Big news in the world of Bitcoin. This morning, Fidelity received the green light for its spot Bitcoin ETF. This is a game changer for investors looking to dip their toes into the crypto waters without directly purchasing Bitcoin. Just when you thought the market was quiet, Coinbase shares surged by 4% on the announcement, showing that the excitement is palpable among investors. But that's not all. The SEC has also hinted at a willingness to review Ethereum staking ETFs in the upcoming third quarter. This could open the door for even more investment opportunities in the crypto space. Trading for the Bitcoin ETF kicks off next Monday, backed by a hefty $50 million seed investment. This is a pivotal moment for crypto, and you won't want to miss what's in store for Bitcoin and beyond. Stay tuned as we break down what this means for you as a retail investor, and why now is the time to pay attention. The landscape of crypto investing is changing rapidly, and you'll want to be ahead of the curve on this one. Big news today for Bitcoin enthusiasts. Fidelity has just received approval for its spot Bitcoin ETF, marking a significant development in the crypto landscape. This approval could pave the way for more institutional investment, driving up demand, and potentially impacting Bitcoin's price trajectory in the coming weeks. Now, let's talk numbers. Trading is set to begin next Monday, and Fidelity is kicking things off with a substantial $50 million seed investment. This kind of backing from a recognized investment firm like Fidelity is a game changer, especially as they join the ranks of platforms like BlackRock and Vanguard, which are already eyeing the crypto space. The SEC is also making waves, signaling an openness to Ethereum staking ETFs in their upcoming Q3 review. For everyday investors, this is a vital indicator that regulatory bodies are beginning to embrace crypto assets more seriously, which could lead to a more stable investment environment. When we see firms like Fidelity stepping up, it's a clear message that institutional money is flowing into crypto. And after the volatility we've seen in the market recently, this kind of stability, backed by large financial institutions, is exactly what many investors are looking for. In fact, the news already caused a ripple effect, with Coinbase shares jumping by 4% as excitement builds around the ETF approval. It seems that this could be the spark that ignites a broader bullish trend across not just Bitcoin, but the entire cryptocurrency market. Now, let's consider how this impacts you as a retail investor. If you're based in states like California or Texas, where the crypto community is booming, this could open up new opportunities for wealth generation. With growing interest from both institutional and retail investors, the potential for price increases becomes much more tangible. As you assess your investment strategies, it's crucial to consider how these developments influence market dynamics. The influx of institutional capital can lead to increased liquidity, which might stabilize the market and allow for more robust price movements. Watching these trends unfold is essential. The market is responding to the news, and savvy investors will want to stay on top of how these approvals will shape trading patterns. Keep your eyes on the charts and pay attention to how Bitcoin and other assets react as the ETF goes live next week. All in all, this is an exciting time for U.S. investors. With Fidelity leading the charge and the SEC showing a willingness to adapt, the landscape for Bitcoin and potentially Ethereum is shifting rapidly. As always, ensure you stay informed and ready to navigate these changes in the market. Now is the time to position yourself wisely and make the most of this potential opportunity. Let's dive into what this approval of Fidelity's spot Bitcoin ETF means for you as a U.S. retail investor. Picture this. You've been eyeing Bitcoin for a while, but the volatility has made you hesitant to jump in. Now, with a regulated ETF, it's like getting an express ticket to the Bitcoin party, where you can invest without managing the underlying asset directly. For example, let's say you decide to invest $5,000 in Fidelity's new ETF next week, with Bitcoin hovering around $30,000. That translates to about 0.1667 BTC exposure. If Bitcoin sees a modest rise to $32,000 in the next week, your investment would be worth approximately $5,334. That's a gain of $334 in just 7 days. Now, let's consider the broader financial landscape. The Federal Reserve's ongoing monetary policies will play a crucial role in how Bitcoin performs. If they continue to signal lower interest rates, it could increase the appeal of Bitcoin as a hedge against inflation. But you might be wondering about the costs involved. Fidelity charges a management fee of just 0.85% on their ETF. So, if you hold your investment for an entire year, you'd pay around $42.50 in fees, which is relatively low compared to other investment vehicles. Now let's switch gears and look at another scenario involving Coinbase especially as their shares jumped 4% on the ETF approval news. If you're a retail trader who already owns $2,000 worth of Coinbase stock, you might decide to use the platform to buy some of that ETF as well. Coinbase charges 0.60% for trades. So, if you decide to invest $1,000 into Fidelity's ETF through Coinbase, that translates to a $6 fee. Investing through Coinbase also allows you to maintain a diversified portfolio without the hassle of individual Bitcoin purchases. Let's say Bitcoin skyrockets to $35,000 next week. Your ETF investment of $1,000 could now be worth about $1,166, giving you a return of $166. That's an easy way for retail traders to capitalize on Bitcoin's movements without diving into the complexities of wallets or private keys. The beauty of the ETF structure is that it allows you to enjoy the benefits of Bitcoin's price surge while mitigating some risks. In many ways, investing in an ETF is like having a safety net while you're walking a tightrope. If you prefer a more hands-on approach, you could also consider using a platform like Kraken to buy and hold Bitcoin directly. While that strategy would allow you to tap into the current Bitcoin price, remember that keeping your assets in a crypto wallet comes with its own set of responsibilities, like managing security and private keys. Speaking of security, it's crucial to consider where you'll keep your investments. Fidelity provides a robust security structure, making it a safe choice for many investors. In contrast, storing Bitcoin in a personal wallet requires vigilance and knowledge about safeguarding your assets. As more institutional players enter the space, like Fidelity, it may create a ripple effect, encouraging more retail investors to follow suit. This could lead to even greater demand for Bitcoin, further driving its price up in the coming weeks and months. To sum it up, investing in Fidelity's ETF represents a significant shift in the way retail investors can access Bitcoin. Not only does it offer an easier entry point, but it also carries manageable fees and less concern about the technical aspects of crypto storage. However, keep in mind that while this news is promising, the market is always subject to fluctuations. A price dip could happen at any time, so be sure to approach this opportunity with a level head and a solid investment strategy. Remember, the key to successful investing is understanding your own risk tolerance and being prepared for the unexpected. Whether you're leaning towards the ETF for its simplicity or considering direct Bitcoin investment, both paths can lead you to potential gains. As the trading screens light up next week with the launch of Fidelity's ETF, it's essential to stay informed and ready to make your move. The next few days could set the tone for Bitcoin's trajectory, and you'll want to be in the right position to take advantage of the opportunities as they arise. In this fast-paced environment, the expression "strike while the iron is hot" has never been more relevant. With Fidelity's approval, the iron is definitely hot, and it may just be the moment you've been waiting for to enter the Bitcoin market. With Fidelity's spot Bitcoin ETF approval, many investors are eager to dive into this new opportunity, but it's essential to weigh your options before making any moves. Let's break down 3 US-compliant products you might consider: Fidelity's Bitcoin ETF, Grayscale's Bitcoin Trust, and Bitcoin-focused ETFs from BlackRock iShares. Each has its unique features that cater to different investment strategies. Starting with Fidelity, their ETF is designed for straightforward exposure to Bitcoin. The minimum investment is around $50, which is accessible for most investors. Fidelity is known for low fees and expense ratio of just 0.75%. This makes it a solid choice for those looking to keep costs down while gaining exposure to Bitcoin. But here's the part nobody is telling you. While Fidelity's ETF offers a hands-off approach, it's important to remember that it might not be the best fit for everyone. If you're looking to have more control over your investments, you might want to consider Grayscale's Bitcoin Trust. Grayscale has been a long-standing player in the crypto space and is backed by solid institutional credibility. However, with a minimum investment of $1,000, it's not quite as accessible as Fidelity's option. The expense ratio here sits at about 2%, which is higher, but for many, the added trust and liquidity might be worth the cost. Now, if you're a retail trader who enjoys a more hands-on approach, let's look at BlackRock's iShares ETF, which is expected to launch soon. While specific details are still emerging, this ETF will likely cater to those already familiar with investment strategies in traditional markets. If you choose this route, you'll need to be aware that BlackRock is known for its competitive pricing structure, potentially offering lower fees than Grayscale but likely higher than Fidelity. Keep an eye on the minimum investment. If it's similar to their other funds, it might hover around $1,000. So, how do these products stack up in terms of supported assets? Fidelity's ETF is focused on Bitcoin alone, while Grayscale's Trust also primarily invests in Bitcoin. But if you're looking for more variety, BlackRock's ETF could potentially include other assets down the line, leveraging their vast experience in managing diverse portfolios. Now, let's talk about liquidity. Fidelity's ETF will likely offer more liquidity, as it's designed for a wide range of investors. Grayscale's Trust trades on the OTC market, meaning you may encounter some inefficiencies during market hours. BlackRock's ETF will likely have competitive liquidity, but we'll need to wait for the specifics when it launches. It's also crucial to consider the potential for price fluctuations. ETFs generally allow for easier management of your investments during volatile market conditions. In contrast, Grayscale's Trust can sometimes trade at significant premiums or discounts to Bitcoin's actual price, which can make timing your entry and exit critical. When investing in any of these products, think about your overall strategy. Are you a long-term holder looking for exposure to Bitcoin? Fidelity's ETF may suit you best. Are you willing to navigate the premium and discount landscape for the credibility of Grayscale? Or are you interested in a more diversified portfolio with BlackRock's upcoming ETF that might offer broader opportunities? As these products gain traction, we can expect more scrutiny from regulators like the SEC and the Federal Reserve. Their stance will undoubtedly shape investor sentiment and market dynamics in the coming months. Ultimately, your choice should align with your investment goals and risk tolerance. Whether you're a seasoned investor or just diving into the crypto world, understanding these products will help you make better decisions as the market evolves. Remember, doing your homework is key. Each of these investments represents a different approach to gaining exposure to Bitcoin and the broader crypto market. So take the time to evaluate your options carefully. All right, let's jump into some actionable steps you can take this week now that Fidelity has received approval for its spot Bitcoin ETF. This news is a game changer, and it's essential to position yourself wisely. Here are 6 concrete steps to consider. First up, set aside some capital for investing. A good rule of thumb is to allocate a percentage of your portfolio specifically for this ETF launch. Given the initial trading price, consider starting with at least $500 to $1,000. This way, you can directly benefit from potential price movements when trading starts next Monday. Next, if you don't already have an account with Fidelity, now's the time to open one. As the issuer of the new ETF, Fidelity will likely have the most straightforward process for accessing it. Sign up, complete the necessary identity verification, and make sure your account is funded before trading begins on Monday. Keep your eyes peeled for market fluctuations this week. While the approval is positive news, the crypto market can be volatile. Set up alerts on your trading platform, whether it's Fidelity, Coinbase, or any other compliant exchange, to notify you of significant price movements. Consider how institutional interest could shape the market dynamics. With Fidelity leading the charge, other asset managers may follow. Keep track of news related to institutional investors entering the market, as their activity can create ripples that could affect your investment strategy in the coming weeks. As the ETF launches, monitor the price closely. Initial trading days can see a surge in activity. If you see a price increase that exceeds your target return, don't hesitate to take some profits. It's always wise to lock in gains, especially during such an exciting time. Finally, dedicate time each day to research and understand the ETF's performance post-launch. Utilize trading screens and analytical tools available on your chosen platform. This will help you gauge market sentiment and adjust your strategy accordingly, whether that means buying more, holding, or diversifying into other assets. By following these steps, you'll be better prepared to navigate this exciting new phase in Bitcoin investment. From setting aside capital to monitoring market trends, each move counts as you position yourself for potential growth. Remember, staying informed and proactive is key. As we step into this next phase, the approval of Fidelity's spot Bitcoin ETF could be a game changer for the market. With trading set to kick off next Monday, many are wondering how this will impact retail traders and their strategies in the coming 90 days. Will we see more institutional interest flood in, or will cautious optimism prevail? As always, the crypto landscape can change in an instant, so keep an eye on those market signals. What do you think? Could this be the catalyst for Bitcoin to soar, or are we in for a bumpy ride? Don't forget to subscribe for the latest updates and insights as we navigate this thrilling journey together.